Greetings everyone, Joseph James here with your nightly newsletter brought to you by the schooloftrade.com. Today was June 17th, 2009. Wacky Wednesday today. That's the Wednesday prior to options expiration Friday. We went over the details about Wacky Wednesday this morning in the live trade room and of course some definite characteristics about a day like today. Come join us tomorrow. We'll talk about Thirsty Thursday and of course OPEX Friday, how we trade them, why you should be a little concerned, and some strategies we can use to counteract some of the things that we see during OPEX week. Now, before we get into the live trade room for today, let's talk about the term of the day. And the term for today is slippage. Now, we had this come up in the live trade room this morning. And slippage is one of those terms that we hear tossed around in the markets all day long, but people have different opinions on what it might mean. Now, slippage by definition is the difference between an estimated transaction cost and the amount that you actually pay. So in other words, what you're expecting to get and what you actually get. That is what slippage really is. Now, it's typically used to describe a filled order. And you may hear it described as saying something along the lines of slippage, or the slippage in the market caused my order to be filled at a higher price than I wanted. So maybe I'm trying to enter the market at 940 even on the S&P. And because of some slippage issues, which actually usually aren't very much of a concern on an S&P, like since it's such a liquid market. But markets like the DAX, the Russell, the YM, and of course currency futures may of course run into some slippage issues. And because you don't get filled at the position that you were trying to, of course, the market will search to go out and find you an equal and opposite order. And if there's not enough volume or liquidity in the market to satisfy your request, right? If you're looking for if you're a buyer in the market and you're looking to buy 10 contracts, well, of course, we have to find 10 sellers. And if there isn't enough participants in the market at that price level, for instance, there's only 5 sellers for your request to buy 10 contracts, then of course we have to go searching for more sellers. And if you're a buyer, you will be searching for sellers at a higher price. So of course, slippage, when used correctly, is usually determined or used to describe a filled order. Now, some of the causes of slippage are low volume environments, so less liquidity than we'd like to see. In other words, if we're trying to get 10 contracts sold, I need to find 10 buyers. So having more liquidity or more market participants at every price level will avoid slippage. And another cause, which is usually not the biggest concern, is going to be a slow execution speed from your broker. So make sure that you're dealing with a quality broker. And of course, try to trade in high volume or high liquidity markets. Now, of course, every market has its periods of being low volume where liquidity dries up late at night, over the lunch hour. So it's not so much avoiding low volume markets. More importantly, the times inside of those markets that have less liquidity than other times. If you want more information about how to avoid this stuff, guys, come join us in the trade room, and I'd be happy to go over with you in live and real time. Speaking about that trade room, it's going to open up tomorrow morning at 7:30 a.m. It's available for trial members, so come out and join us free for 3 weeks. And as lifetime members, where we have no monthly fees, everything's included: trade room, indicators, charts, even market data. Now, when we open up that trade room, we have 3 very simple jobs. First job is to identify the news events and the type of market that we see today. Job number 2 is to adjust. We want to adjust now to what we've identified, that is, define our windows of opportunity, define our trade zones. And then, of course, job number 3 becomes very easy, and that is to execute. We practice patience and discipline to wait for price to come to us. We wait for the perfect trading opportunities that come to us in the market, and we let our rules do the trading. Now let's take a look at some of the success we had today in the DAX futures market. Now, symbol on this is FDAX. And if you're unfamiliar with the DAX, or if you're just getting to know this market, this is one of our favorite markets. Now, I've been trading this market for a while now, almost as long as I've been trading the S&P. And we're always amazed at how well this market moves, how easy it is to put a couple winning trades together and make a just amazing amount of money. As you can see here today, guys, $1,600 USD before lunch today, and that's on 3 contracts. We went 6 for 7 here in the room this morning. At one point, we were up about 1750 USD on 3 contracts and about 6 trades before lunch. And of course, the DAX, as you guys can see, made it quite easy. We got 47 points out of this market today out of 5 trades. 47 points out of the DAX this morning, which of course is one of our most favorite markets to trade. Now, up in the left-hand corner, you can see how we got the day started here at 9:14 this morning, long at 27.5. took profit at 3 and 6, totals up 9 points total. And of course, that's a two-step pattern. That's a counter trend trade pattern. At 9:58, about a half an hour, 45 minutes later, as you can see just to the right of this, okay, another wave setup. Now, a wave setup is one of our most popular. It's one of our most consistent, okay, and dependable trade patterns. This is a short trade here at 14.5. Took profit at 3, 6, and 10 points for a total of 19 points there. So as you can see, guys, before 10 o'clock this morning, we were adding up the points as the market unfolded. 9:42, all right, 9:42 this morning, two-step long at 82. Okay, that's 2 and 2. This is a very small trade here. I'm sorry, this was 10:42. Excuse me. That's actually wrong. 10:42. Excuse me. A two-step long, another counter trend trade. A very interesting trading opportunity here on this two-step at 10:42 this morning. Our third trade here in the DAX, and that was because we actually had to almost finesse our way out of this trade because price action literally died on the table for us. So we got out with 2 points and 2 points in the second, so a total of 4 points. Very small winning trade there, but of course, 4 points times $35 per point. As you can see, a 4-point winner is not that bad in the DAX. Finish up the morning, 10:52, not too long thereafter. This was a two-step. Long at 74 even, took profit at 2, 4, and 10, and of course, that's a total of 16 points there on the DAX. And guys, I want to point out real quickly that we will not only trade this market to the upside, but we will wait patiently, trade it right back down to the downside, and vice versa. Guys, it doesn't matter what type of market environment we're trading in, whether it be a trending or a sideways market. I will trade this thing up, down, sideways, and we'd love to show you tomorrow morning in our live trade room. 47 points there on the DAX this morning, guys. 47, $35 per point. You guys do the math. Let's recap. Live trade room opens at 7:30 a.m. Eastern time tomorrow, so come join us. We're going to trade 6 different markets. Of course, the E-minis. We'll trade gold, euro, crude. Boy, you guys, you name it, we'll trade it. Live calls with entries, targets, and stops. I'm going to show you guys everything you need to see. Plenty of opportunities for questions, so come hang out with us. Spend the whole day if you want. We'll be there from 7:30 until 4:15, Monday through Friday. You're going to see the market in a completely different way as you learn the James Wave method of trading, and we'll give you a free 3 weeks to come out and give us a try. sales@schooloftrade.com is our email address. And guys, my name is Joseph James. Hope the video helped, and we'll see you next time. Come out and join us tomorrow morning in the live trade room.